Something just happened to Bitcoin that's different than anything that's ever happened before.
Welcome back. Not a lot of green on the screen today, as you know. However, you probably didn't look at Bitcoin. It's up 3%.
The most interesting thing that's happened over the last week or two is that it's decoupled from the NASDAQ, although not today, and it started to trade with gold. You want to see it go up while your other holdings go down, and then you could say, look, I have a non-correlated asset.
For the first time in history, Bitcoin might be breaking free from the stock market. Now, it all started in early April 2025. Something strange happened. President Donald Trump's tariff policies started to really scare the world. So stocks crashed, tech stocks dropped, and the stock market's S&P 500 went down. But Bitcoin went up. It jumped in the exact same time period. Now, if you're thinking, okay, well, maybe that's normal. It's not. Historically, Bitcoin moves with tech stocks, and when tech stocks fall, Bitcoin usually falls even more. That's just how it's always been. Now, in the technical world of investing, those are called correlated assets. And Bitcoin has always been a correlated asset, meaning it moves in the same direction as something else. In this case, generally the stock market and especially tech. But this time, Bitcoin went way up while tech stocks collapsed. And that matters because if Bitcoin truly starts moving independently, it could unlock something that investors have wanted for a really long time, and that's what's called a true uncorrelated asset. Now, there's a lot of very interesting things that are lining up in Bitcoin's favor, and in today's video, I want to share some exciting stuff that's happening to Bitcoin, from the Federal Reserve backing off banking requirements and some other interesting charts that'll really make you think. And spoiler alert, there's price predictions of $150,000 per Bitcoin by the end of this year to as high as $2.4 million in the long run. So with that said, let's get into it. Hi, my name is Andrei Jikh. Hope you're doing well. Come for the finance and stay for the D word, decoupling. Now, I always want to start these price prediction videos with a reminder that all of this is very speculative and you should never take investing advice from social media, even if they have a lot of subscribers and make very boring YouTube videos. But having said that, this video is going to break down why Bitcoin's divergence is such a big deal and why some people think it's going to make Bitcoin even more valuable, and what some of those biggest names in finance like Cathie Wood and Tom Lee are predicting next. So let's start with the great divergence. The question is, why does this decoupling matter? And the reason it matters is because of something called diversification.
So if you said, yes, we should have a 1% Bitcoin sleeve because it's not stocks, but it has the potential for returns, that's actually what you really want to see. You want to see it go up while your other holdings go down, and then you could say, look, I have a non-correlated asset.
You see, when you first start investing, the professional advice you're going to hear is that a good portfolio of stuff is stuff that doesn't all move together for the same reasons. If stocks crash, for example, you want something else that doesn't crash at the same time. That's why people aim to own some stocks, bonds, and some real estate, because depending on what happens to the economy, ideally one of those would still be making you money to smooth out the ride in retirement. And traditionally, stocks and bonds have balanced each other out. But in today's world, we have high interest rates, there's geopolitical chaos and tariffs, and that rule is starting to break because stocks and bonds have started moving together. And that's why investors are searching for something that people say zigs while everything else zags. It's kind of lame, but you get the idea. And this is where Bitcoin starts to become exciting, because it starts to diverge from all the other assets. And the data kind of backs this up. Check this out. This is directly from BlackRock, which is the biggest asset management company in the world. Now, this chart compares what happens to 3 different asset types: stocks, gold, and Bitcoin after major geopolitical events. And it's broken down into 2 separate columns: 10 days after a conflict and 60 days after a conflict. So when the world is fighting with itself, like the US-Iran conflict, for example, stocks beat gold, but after 60 days, gold beat stocks. But in both of those scenarios, Bitcoin beat both. During the pandemic outbreak, 60 days after it happened, Bitcoin was again the major winner. And again, during the 2020 US election disputes, Bitcoin was the clear winner. And again, during Russia's invasion of Ukraine, and again during the US banking crisis when private banks were defaulting because of the high interest rates from the Fed. Now, BlackRock didn't publish the data on the yen carry trade when everything was falling apart because they didn't have the data just yet, but we do now. And 60 days after the world was terrified of how Japan's carry trade could infect the global markets, the winner, not Bitcoin, it was actually gold, but Bitcoin did beat stocks. And obviously more recently with the tariffs, Bitcoin again beat everything else. Why? One of the reasons is there's no tariffs on Bitcoin. Bitcoin does not have the same geopolitical risks like tariffs, torts, fees, and greedy governments, and a variety of other risks that are traditionally associated with owning other types of investments. And as more and more people begin to understand that Bitcoin has very different risks, this decoupling could continue. But there's an even more interesting chart that's been floating around that I want to show you. And before I show you the next chart, here's a quick but super important reminder. While you've been watching this video, chances are someone just had their identity stolen. And that's because identity theft happens every 22 seconds in the US, and the median loss is over $500. That's thousands of dollars lost every few minutes. And a lot of that starts with data brokers. They're companies that collect your personal info, like your name, address, phone number, family details, and sell it online to anyone. That's why I personally use a service called Delete Me, who also sponsored this part of the video. After I signed up and added my info, Delete Me scanned hundreds of data broker sites and immediately started removing my data. And since I've been a member for over a year now, Delete Me has removed dozens and dozens of brokers with my personal data. They even send me regular reports that show exactly what they found, and if anything pops back up, they take care of it again. Delete Me gives me a peace of mind knowing I have experts working in the background to keep my personal data out of the wrong hands. So if you want to do the same for yourself and your family, head to joindeleteme.com/Andrei20 and use code Andrei20 to get 20% off any US consumer plan. Big thanks to Delete Me for sponsoring this part of the video. And now I want to show you an even more interesting Bitcoin chart that's been floating around. And that's this one. It might look confusing at first, but it's actually really simple. This chart compares the price of Bitcoin to something called M2. Now, what is M2? M2 is a measure of how much money exists. Not all the money. More specifically, it tracks all the cash in circulation, all the money in checking accounts, savings accounts, and some forms of money market funds. Basically, if it's money you can quickly spend or save, it's probably counted in M2. Think of M2 like the size of the economy's wallet. If M2 is growing, it usually means more liquidity. There's more cash floating around. People have more spending power, which means assets like stocks, real estate, and Bitcoin usually go up. If M2 is shrinking though, it means liquidity's drying up. Less money to go around, and riskier assets usually suffer first. It means when money leaves your wallet, Bitcoin's gonna feel it too. But here's where things get interesting. Let me show you the updated chart. This one. Today, as of April 2025, M2 is not falling. It's exploding higher. Liquidity's skyrocketing, and you could see it. There's a huge vertical jump in the global money supply. And if Bitcoin is still lagging behind M2 by about 2 months or so, then based on where liquidity is today, and if you believe it's going to continue to do what it has done in the past, then Bitcoin could go way up by June or maybe July. Now, hopefully I haven't put you to sleep just yet, because this is where it gets really interesting. There's a couple more exciting things happening behind the scenes, things that, if you believe in Bitcoin's long-term story, should get you really excited. First, the Federal Reserve. For years, the Fed, along with other regulators like the FDIC, have made it really hard for banks to work with Bitcoin and crypto companies. Banks basically needed special permission to touch anything related to crypto, and most of them just didn't want the headache. But just recently, they changed their mind. In April 2025, the Fed officially withdrew their guidance. So no more automatic restrictions, no more needing pre-approval just to offer crypto services. Now, this didn't make huge headlines, but make no mistake, this is huge. Because when banks feel safer offering Bitcoin custody services, aka the ability for us as consumers to deposit and withdraw our Bitcoin from the banks, that's what opens up the door for billions, if not trillions of dollars to flow into Bitcoin over the next few years.
When your bank tells you they'll buy Bitcoin for you and they'll make it really easy, and you can do it on the phone, it'll cost you $1 million Bitcoin.
And that's just the beginning. Now, at the same time this was happening, though, there's also this guy, Jack Mallers, the CEO of Strike, one of the biggest Bitcoin payment companies in the world. And he just launched a brand new company called 21, with over $500 million already raised. And the goal is simple: hold as much Bitcoin as possible. In fact, their starting treasury is set to hold 42,000 Bitcoin, which is enough to instantly make them one of the biggest Bitcoin holders in the world. That's more than most public companies have. So if you add it all up, liquidity's coming back, the Federal Reserve is backing off, new Bitcoin native companies are being born to compete with Michael Saylor's strategy, and institutional investors, the biggest funds in the world, are all starting to pay attention again. And it's all kind of happening quietly behind the scenes, but it is happening. And that's also why some of the biggest names in finance are starting to make some pretty crazy price predictions about where Bitcoin could be going next. Now, if you like watching my videos, you probably know by now that I really don't like talking about price predictions because without a specific date, all price predictions could end up becoming true. So personally, that's why I don't have any price predictions. Instead, I try to explain and understand what smarter people than I am are saying about it, and I try to find the truth, which is probably somewhere in the middle. But with that said, here's what some of those smartest people in finance are actually saying. First, there's Tom Lee, the co-founder of Fundstrat, and Tom has been one of Bitcoin's biggest believers for years, even when it wasn't cool to talk about. And in a recent interview with CNBC, he said that he thinks Bitcoin could easily hit $150,000 this year.
People love it when I ask you what your year-end target is on Bitcoin, because it makes people very excited.
Yes, and I mean,
one crazy high again.
I think it's still 150 or higher as possible. Okay. I know it doesn't feel like it, but once we get through this tariff and that agenda around tariffs, markets can look forward to things that could be positive.
And he points to things like the Bitcoin ETFs, the growing adoption from institutions, and the simple fact that people are looking for anything that isn't stuck in the old financial system. And Tom's price prediction is not even the craziest one. Because if you really want to go full moon boy, Cathie Wood from ARK Invest has a price target that's going to make that look like nothing. Because according to Cathie Wood, the latest Bitcoin price research in their most optimistic scenario is that Bitcoin could hit $2.4 million per coin by just 2030. According to ARK, Bitcoin could capture about 10% of gold's market cap, 5% of the global currency reserves, and a big slice of the institutional portfolio pie. And if that happens, Bitcoin's scarcity kicks in, demand spikes, and the price could go parabolic, and we could get what's called Samson Mao's Omega candle. Now, an Omega candle is where it moves kind of slow, and then boom, everything all at once, and you get this big jump. That means we might be just chilling at 100K, we wake up one day, and Bitcoin's at 500K. Sounds crazy, but stranger things have happened to Bitcoin, and it's not out of the question. Even ARK's bear case, or worst case scenario, is still over $500,000 per coin. That's still a 5 to 7x from today. So even though Bitcoin is close to $100,000, which seems expensive, we could just be getting started. So here's my opinion and how I'm personally investing. Now, I've never really heard anyone explain why Bitcoin is such an opportunity in the way that I want to explain it right now. It's going to sound a little confusing, but hopefully it makes sense. The reason I'm so excited is because of how much disagreement there is about Bitcoin. You see it everywhere. Just look at any comment section of a Bitcoin video, especially among very intelligent people that have clearly never studied it. And the reason that Bitcoin has so much potential to me is because there's a huge delta, a cosmic-sized space between what Bitcoin really is and what people think it is. If everyone in the world, for example, knew and understood Bitcoin to the degree that someone like billionaire Michael Saylor does, it would already be worth millions of dollars a coin. But the world doesn't yet know or understand it, so it's not worth millions. But on the opposite end of that spectrum, Half the world seems to be convinced it's a total scam. It should be worth nothing, right? And yet, Bitcoin is still worth almost $100,000 right now. How can that be? What would scare me right now is if everyone in the world agreed Bitcoin should be worth $1 million, because then it would remove the opportunity for it to catch up to people's misunderstanding of it. So my point is, the opportunity is all about the psychological arbitrage, that massive gap between what Bitcoin really is and what most people think it is. Between understanding monetary theory and property rights and economic energy and thinking it's just a scam. And it's that delta, that space that's in between, that I think is what gives Bitcoin the leverage to go to millions of dollars. That's the spring that's coiled up so tightly that drives a lot of Bitcoin's volatility and potential. And all this sounds crazy, and it might be crazy, but when you look at how liquidity is exploding, how regulators are backing off, and how institutional interest is quietly going up, and banks are about to get involved, more and more companies are getting involved, makes you wonder, maybe crazy is just what's kind of normal for Bitcoin. So here's how I'm investing. Now, even though I love Bitcoin, I still don't have 100% of my money in it. I have about 30% of my net worth, depending on the day. And sometimes I think to myself, if I just sold all my stocks and all my real estate, I'd probably end up making more money in the long run. But I don't know what I don't know. And because I'm ignorant, I stick to the core principle, which is diversification and a portfolio of uncorrelated assets. That's just me though. I'm gonna be watching it closely, and if you wanna follow along, smash the like button, subscribe if you haven't already, hit the bell button to turn on notifications, and let me know what you think in the comments. And if you wanna learn how to self-custody your Bitcoin, you can find it down below. You can use coupon code Andrei40 to get an additional 40% off. In the meantime, I hope you have a wonderful rest of your day. I'd love to see you back here next week. I'll see you soon. Bye-bye.